I don't know if I would I would take the BMW on the road.
You don't take it out of the garage to polish it.
Yes, but then after taking on an insurance policy that guarantees that if I do get into an accident, I will not bear the financial costs of that accident, or at least I will not bear the full burden of that accident, I'm more likely to be willing to take that car out. And so in that sense, there are cases of moral hazard that actually make us more productive. So the case of auto insurance makes us more productive because we're willing to take vehicles that are worth $40,000 or $50,000 onto the road so that we can travel distances to be more productive ourselves, because human beings in general are more productive if they're more mobile, if they're able to go to different states to specialize in whatever they have a comparative advantage in. And so that in that case, moral hazard is a positive. What happens though is, in many cases, and especially in government programs that don't use financial indicators as I guess the guiding rules for their policy, insurance or insurance schemes actually encourage behavior that surpasses the socially optimal level of moral hazard. So what happens is people start taking risks that are actually not good for our economy or for society. So in the first case, the risk to drive is actually good for our economy and good for society. But in later cases, to take unnecessary risks in financial markets because you know you have the implicit backing of the U.S. government, many of those actions aren't to the benefit of the U.S. government. They're not to the benefit of society as a whole. But because of the insurance schemes provided, they're actually to the incentives, I guess, of that situation provide or kind of encourage that behavior at the individual level of that individual financial firm.
Okay, now let's cut to the quick on this, because big banks were taking huge risks, and now they're taking another level of risks with taxpayers' money. And that's a case of moral hazard. And there's a consensus of the panel that instead of reducing the moral hazard of the big banks taking unusual or undesirable risks that can affect the public at large, that they're, if anything, more likely to do so in the future. Is that the consensus?
Absolutely. Correct.
Absolutely.
Okay.
And it's even beyond the financial sector. If you look at the bailouts of the auto industry or other industries during the economic crisis in attempts to save jobs, what we've done is we've saved executives and other entities within the business decision-making process, like unions and things like that. We've shown them that if they take unnecessary risks or push their companies to the brink of disaster, it's okay. We'll bail you out as long as you employ enough voters. We will bail you out. So go ahead and take those unnecessary risks.
Now, is it fair to say that with a set of large firms, these big banks primarily, we're looking at firms that are too big to succeed, and we're still treating them as if they're too big to fail? Is that true? Okay. Now, let me turn to the consumer side of that financial act, because that's gotten so much of the press, the media hype that says that overall this bill has been a good bill because it protects consumers. Now, my take on this goes back to your point as to the value of information in the marketplace for people, so people can make wiser, smarter decisions. I've been opposed myself to the consumer part of that bill, not the credit card part, but the consumer agency, this whole new bureaucracy that's been set up to protect consumers. It seems to me, and you tell me whether I'm wrong, that if we had better information provided to consumers as to mortgages, the details, the risks, etc., that new bureaucratic agency should not be necessary. Is that a reasonable judgment?
Well, let me address that issue with a slightly different example, because I think if I address it in a slightly different way, maybe we would be able to communicate it better to the viewer. You may recall that in Austrian economics, it is very important for, realize that no one in the market has full information. In other words, it is really the market that is able to provide the full information.
Yeah, but the lack of information is why insider trading is
Well,
illegal.
No, correct. But then what we're suggesting, or at least what the government is suggesting, is that there is going to be one bureaucrat or a bunch of bureaucrats who are going to be able to provide the correct information. And you see, that to me does not make sense. In other words, I am agreeing with you, but I am agreeing with you from the point of view that what we need to do is make people understand that, you know, information is costly. Usually the bureaucrats do not have the correct information. And I mean, do we need proof of that? I mean, how come that the Federal Reserve Bank allowed, you know, the situation to develop the way it did? How come that the Bush administration allowed the situation to develop the way it did? You know, not just the Obama administration. Or in other words, regrettably, many of our decisions are turning out to be political decisions, when in fact the decisions should be allowed to the market. And the market by itself will develop institutions. Some of them we cannot even foresee in advance. And just to give you an example,
Develop enterprises that provide better information.
Exactly. Take a look at consumer protection. In a way, many of the popular journals,
Like Consumer Reports?
that goes ahead and say, look, we tested this product, we got information from a lot of people, and lo and behold, either the product is very good or the product has certain deficiencies. Therefore, the idea that you need a bureaucrat to provide the correct information is just a failure. It's just a bad idea. So I agree with you, but on the basis that, you know, the market is very dynamic. And since the market is very dynamic, if there is a need for that information will be provided. Now, definitely, initially there may be some problems. I mean, like with all consumer goods. But then what happens is that the private sector comes up with means of providing more information to, you know, the public at large. Now, regrettably, this doesn't always work. And for example, one reason it doesn't work is when in the media, in particular, you develop extremely powerful conglomerates that then have, you know, control of the type of information.
You mean like the rating agencies?
In part the rating agencies, but I mean even the large newspapers that, you know, the news become what the newspapers decide they want to convey, whereas the news, you know, is what anybody would think is of interest for, you know, their own action. And I mean, I think we have seen that repeatedly, as we mentioned before, that, you know, the news media provide information which is dated, which is inaccurate. And I must say that the growth of the internet, even though there are some problems right now with the internet, but at least it's giving the consumers an alternative way of searching for information.
Okay. Well, again, you've made a very strong case in this book for the provision of for both the need for better information in the financial sector for buyers and sellers.
Right.
Great. There's still unmet needs, or needs for better information than which already exists. And I hope you'll send a copy to Rupert Murdoch, you know, who now owns the Wall Street Journal.
Right.
Yes.
Okay. That's key, and I think it's since you were addressing my question, I'll state what I thought I was hearing as a conclusion, that better information is a substitute for a bureaucratic agency.
Exactly.
If you have better information, you don't need the bureaucratic agency.
Yeah.
After all, there are, actually, we're going to turn now to Obamacare. I think there were 156 new agencies called for in that bill, as well as some new ones in the financial bill. So the bureaucracy is being built as we speak. and built with a vengeance.